public notice by IDBI Bank to sell the property of a defaulter has captured the public's imagination. What drew everyone's attention was the name of the defaulter and the guarantor, which some felt should have been a giveaway. Social media users initially mistook the advertisements for a joke. Three prominent Indian banks have been taken for a dramatic ride of a total of 150 crore rupees by a couple of Indian companies, which have now become nightmarish, non-performing assets. Now, these companies are called the Great Indian Tamasha Company. That's the name of one of those companies. And the question today is, were there no red flags? So the guarantor in this case is the Great Indian Tamasha Company, and the company which actually took the loan is the Great Indian Nautanki Company. I'm going across now to senior journalist and author Tamal Bandyopadhyay, who, to give all due credit to, is the one who sparked off the chase for this story with his tweet on social media. So, Tamal, you're the one who highlighted this, and then a lot of us journalists then followed up the story. And the novelty factor is the names. That how do you give loans to a company called the Great Indian Nautanki Company with a guarantor from the Great Indian Tamasha Company, which then turn into NPAs and you don't even check. But to be fair, having such a name in itself is not an illegality, isn't it?
Yes, absolutely, absolutely. In fact, if you see that the tweet you are referring to, which have drawn massive attention, hundreds and thousands of people either retweeted or made comments or loved it, liked it. So there were many who pointed out this, what's wrong about it, what's in a name. And there are names like Zerodha, there are names like Paisalo, there are names like Alibaba, there are names like 5paisa.com. So if anything goes wrong with them, would you blame the banks? So what's there in a name? So that's a very valid point. And Nautanki and Tamasha, the art form. So if that's correct, but the other thing is this, that does not condone the bankers because the right kind of due diligence had it happened, then you would not have seen that scenario or that Tamasha. For instance, Tamasha, which is the guarantor, now it was incorporated in 2008. Its authorized share capital is 2 crore, but actually it's only 2 lakh. I mean, the paid up authorized is 2 crore, but paid up is 2 lakh. Similarly, Nautanki authorized is 20 crore, paid up is little less than 15 lakh. So would you allow a company to play the guarantor's role with a 2 lakh paid up capital? And if you look at the individuals involved there, the directors, have you checked their what the kind of involvement they have? What are the other companies? What's the business model? What's the address of these companies? So while name, I can imagine you can say that you can have any name permissible by whatever it is under the law, and there's nothing there, the art form. But the fact is these entities, those who are involved in it, the directors, etc., have the bank checked their other credentials, like what are the other companies they are involved in, the model of those companies, the addresses of those company offices, and as I said, the share capital of Tamasha is 2 lakh. So that clearly shows, I mean, you can't condone the banks and say that, look, so what, it's Nautanki and Tamasha, they are very funny names. And finally, there's also a story going around, is these companies had fallen into trouble because of COVID, because as you know, Whiscup International is involved in the part of the group, and they're a huge mammoth company in the terms of event management. It does IIFA, IPL, Commonwealth Games in UK, Australia, so on and so forth. But my understanding is this Tamasha company actually fell in trouble and became an NPA much before the COVID struck us. So
Tamasha was the guarantor. So
yeah,
did Nautanki first fall into trouble?
Yes. I mean, just saying yes, no, yes. And it happened much before the COVID struck. It became an NPA. You check with the IDBI books, it became an NPA much before COVID. So the theory which somebody is trying to propound is this: look, Bechara, I mean, you can't blame them for their names because they had fallen into bad times because of the COVID, etc. I don't buy the logic because the company, which is the defaulter, became an NPA much before the COVID struck us.
The other question is, and take the name point completely. I mean, you can float a company and call it anything tomorrow. But why? Why these kind of names and then the behavior that resulted from it? It almost seems like a major prank. And a lot of people first thought this was a prank.
Yes, that was I personally thought it's a joke, and I was making doubly sure that yes, indeed, it's an advertisement for selling off the land to recover the money under the SARFAESI Act. When how would you? But I mean, however, the defense is there's nothing wrong with the company, but if I would like to believe that if a company carries the name of Tamasha and Nautanki, banks will be much more careful than it's a normal name. And here, when you look at the company profile, the directors, the board of directors, and what they do, what kind of businesses they run, and then everything comes out in the open. Their office addresses, everything comes out in the open. So there is no way. I mean, it is indeed logical that nothing wrong with Nautanki and Tamasha, but there is nothing right in the bank's way of the credit appraisal and the risk management in this case. Fortunately, this is only 150 crore. This is not running into thousands and thousands of crore. That's the good thing about it.
The big story here, Tamal, is why the processes are still not in place. I mean, Indian banks are not new to being singed by defaulters, willful defaulters in some case. The NPA trouble has been hanging around their necks for a while. One would think that the SOPs put in place, the due diligence put in place, would be ironclad by now. Is this story also important because it exposes the chinks there?
No, Tamasha, there's a technical issues there. This thing happened much before, like the so-called asset quality review, which Reserve Bank of India launched in 2015 sometime, and which exposed the soft underbelly of banks, and following which the banks are much more careful about risk management, credit appraisal, underwriting, so on and so forth. The loans are given much before that. So it's not the loans are given yesterday and it's turned bad. So my understanding is this bankers are, as far as due diligence is concerned, bankers are far more efficient today than what they were to be before 2015, the pre-AQR era. And these loans were given before 2015. So it's not that these loans are given yesterday or day before.
What are the lessons here, though? Are we now in a situation where such oversight will not take place? Have we tightened the screws enough?
I would like to believe so. And that's one of the reasons the credit offtake is, I mean, one side is the demand is not there, but other side also bankers are much more circumspect. Their due diligence is far better than what it was. Their credit underwriting and risk management is far better. They have learned their lessons. So certainly I can vouch for this, that what the risk management and credit underwriting, etc., bank and the due diligence which banks are following now is far better than the pre-2015 pre-AQR days. They have learned their lessons, and they are now overcautious, which is why you are finding that despite COVID and other things and all, on the corporate loan side, bankers are not worried at all. I mean, there's no fresh accretion of NPLs. Because of rise in interest rates, we may see some problem on the retail side, but corporate side banking, that part of bank's balance sheet is relatively safer than what it was before.
All right, so we can hope no more Tamasha or Nautanki when it comes to the NPAs. But thank you so much, Tamal, for stopping by and explaining this story in such detail as always.
Thanks, Tamanna. Thank you.